I'd like to introduce Guy from Banjo Loans. So Guy has been involved in financial services for over 20 years. He started in the UK and moved to Melbourne in the year 2000. As an ex-Olympic swimmer, Guy is driven to succeed in everything he does, as well as helping those around him to achieve their goals. And he loves seeing Banjo's clients and partners grow and succeed. He believes Banjo have a responsibility to help drive the sustained growth of Australian small businesses by allowing them to access the funds that they need to succeed. So welcome, Guy.
As you know, I'm Guy Callaghan. I'm the CEO of Banjo Loans. So I have been CEO there for about 4 years. We are a alternate lender or a fintech lender that looks after Australian SMEs. We've been around for about 7 years, and we have a national reach and a national. We have offices around Australia, and we provide working capital funding, unsecured funding to businesses to help them achieve their growth. And so we get to work with a lot of really fantastic business owners, and they're actually very inspirational themselves. So what we do every year is we do a survey. And we don't do it. We get an external consulting firm called Honeycomb to conduct a survey to somewhere between 500 and 600 small to medium business owners across Australia in a variety of spots and sizes of their business. And that culminates in the reports that we do. The great thing is the report's now been going a couple of years, and it gives us the opportunity to compare how it was going last year. We always have some similar questions, and we always have some questions that focus on the macro environment as you see it at the moment. Interestingly enough, when we did the survey, well over half of SMEs were actually either achieving or overachieving where their targets were from the previous year, which has been really good. In fact, what we found was most SMEs were really positive about where they come from and where they were going. I think a lot of this had to do with coming out of COVID lockdowns and being in a position of more probably secure thinking around where they were with the market. And even though they knew there were some headwinds coming with inflation, supply chain issues, and hiring, recruitment, that they were still really positive about what was going to happen. So some of the actions that people took during the pandemic itself. So there's a lot of people that were struggling during the pandemic, but a lot of businesses actually made investments throughout the pandemic to actually sort of help them get to the next stage of where they wanted to go. Investing in technology was a huge one, and you can see the increase there from the year before. Products and services, and I'll touch on these again a bit later, and then also buying assets or equipment that's going to help them sort of grow and get into the next stage of their business. What we found was businesses that exceeded their revenue targets were the ones that actually invested in things like technology, equipment, hired new staff. So they actually, the ones that went over and above what their revenue targets were the ones that actually started to invest for growth and made a really strong push during that time when things were in lockdown and coming out the other side of lockdown. So preparing themselves for the growth. And some of them, and again, I'll touch on this as we go through, some of them did this through using their own capital. Some of them did this through different types of funding and finance. What were the top barriers for growth? So when we did the survey, the market and economic conditions was the number one concern. Now, as opposed to when we did this in 2021, when market and economic conditions was the concern, that was a real focus around lockdowns and not being able to do their business properly. This time around, there's a big push around. It was a big push around inflation, increases in prices due to supply chain issues and recruitment type challenges, which you can see up there as well. So slight change in what people were thinking, but still economic conditions was the number one concern if people were achieving their targets. As I mentioned, so over half, so 55% are really concerned around inflation. And just looking at different things that they can do. So, but what we did find was all business owners were really were prepared. Like SME business owners were really prepared on inflation was coming. So, what do we need to do? How can we help ourselves? So, looking at different things like increasing prices or reducing their supply costs, and looking at different ways that they can do that. Hospitality was one of the highest ones that were concerned with inflation, as to be expected. You know, they really struggled in COVID times, and now we're coming out of it. Even though things are spiking again at the moment, they're the ones that then were going to be hit with the double whammy as they came out with inflation. So it was a big one for them. Retail was even stronger though. So 70% of retail businesses were concerned about inflation. And so they were looking at all different, as simple different ways of either reducing costs or increasing prices to combat that. Again, 70% concerns super high, but all the business owners, the majority of business owners were positive about what they were doing and being prepared for where they go. And I just shot myself in the foot for the next slide. So, and this is really, like I've said a couple of times before, business owners knew that there were some barriers in the economy for them, namely inflation and supply chain, yet they were still really positive and they were prepared to do it and confident about the future. Now, a lot of people are more confident about the future of business due to the hardships that they've been through for the last couple of years. So partnering growth. So what do business owners sort of say about partnering growth in 2022? Those ones that are expecting to grow in 2022 looked at different areas and different ways that they could grow, whether it was investing in marketing, improving their product offering was a best one, and also in technology, buying assets or equipment and seeing different ways they can launch different products into the market. So yeah, technology keeps coming up time and time again when we're going when we're talking to business owners about how they can improve themselves. So yeah, I would say that when we have people coming to us, that the three most common areas are asset and equipment they're doing that they're pushing in growth, so they need stuff with marketing and driving that side of things, and then technology is a really big one. And sort of further hitting that point, what we found during COVID was a heap of businesses turned to online type revenue to generate and changed, and I hate to say that, we pivoted from what they were doing to become more online and drive some of their revenue online. And that's, that even compounded and was further up in 2022 when we did this survey. So the proportion of online revenue is growing, and the majority of businesses expect that to just continue through into the future. This one, look, I don't know what people online are sort of feeling, but growth through acquisition is still, is high on cards. And I know, and I'm seeing in our industry, there's a bit of acquisition and mergers that are happening at the moment. And I think there's opportunity for businesses that were probably just getting a little bit stale and needing to change up, being merged or acquired to help other businesses achieve their goals. And the next slide here just says why are they looking to acquire things? And the main reason is to add value to their customers. So, and how do they do that? They offer, a wider range of products and services. They have a wider reach of where they're going to do. They have the ability to expand their production and serviceability, and of course, economies of scale for acquiring. So I think what we'll see going through into 2023 is a continuation of this merger and acquisition environment. So just here, the next sort of section, I'm going to talk about how businesses are leveraging finance to help themselves grow. And what we'll find, you'll see is majority of growing businesses and successful businesses are actually utilising sources of funding to help them achieve their targets. So, 63%, so nearly 2/3 of businesses are intending to leverage funding to win that, for helping them grow next year, or coming through in the following year. And of that, only 17% actually intend to rely on their own profits and their cash flow of the business to fund their growth. Majority, through tradition, are going towards bank loans. Some are going to their founders and capital raise side of things, and then others are looking at different types of credit facilities they can use. The interesting thing we're still finding is lenders like ourselves, even though we've been around for a while, and there's a really competitive market now, a lot of SMEs are still coming to understand that and understand what's available to them away from a traditional bank type loan. But when business people are looking for funding, interest rate or the price that they're charged is still the number one consideration by quite a way, really. But then what they start to do is once they realise how hard that side is, that they start to flip and look at how quickly can I get them funding and how easy is it, and the opportunity cost of not having the funding now by taking a long time to get their funding, because and this is not a bank bashing exercise, but what we find is often clients who come to us, they might spend 8 weeks working with their bank to try and get a loan, and at the end of that 8 weeks the bank will turn around and say no. So they've just missed 2 months of ability to grow and drive their business forward. So then they come to someone like us, and we'll turn it around and we'll give them an answer if it's a goer in the space of a day, and then we can turn the loan around as up to 48 hours. They can have their funding, depending on whether they've got the right financial information available to us. And again, tradition has sort of driven this, that secured products and term loans are still the most used financial products. So going to a bank, getting a loan secured against your house or your business property or whatever it might be, extending your overdraft, that type of stuff is what seems to be still the traditional side of businesses getting funding. As you can see, where are we? Oh no, so yeah, and then the other areas are like supply chain type funding as well. However, again, nearly 2/3 of businesses found difficulty in obtaining funding, with challenges of actually getting the right funding. A big one is how long it takes to receive the funding, so the security they have to provide against things, and finding that suitable interest rate for finding their loan. So again, sort of coming, and again, it's not a product blog on us, but we take unsecured loans, so we only secure the loans for a business on how well their business is doing, so how the cash flow is looking in their business, and how a business owner can meet the repayment terms that we have offering. So there's no security needed, and again, we turn it around very fast. So there's two key areas that help businesses for us. So things are slowly starting to change. So history has said that people still keep going to the banks because it's the historical way of everybody knowing where they are, and some people going to family and friends and using their own side of things. But now more and more businesses are actually realising that there are some alternate types of funding out there, finance out there that they can use, which might be a lot more user-friendly to them. Okay, so the last couple of sections are touching a bit more on some of those challenging areas that we've found, aside from inflation and the current environment for businesses. So recruitment challenges. Look, I don't know about people on the line, but we, as a small to medium business ourselves, really, the recruitment is probably our number one concern at the moment. And not a concern, but it's our number one hurdle to overcome, because we're desperately trying to hire a number of areas, and it's just we don't have the supply out there at the moment. And I was reading today that that Albanese government's looking at different ways to bring in skilled migrants into the environment, into Australia, which I think is fantastic. They have to start doing some things like that to get the unequilibrium of supply and demand for employment. Obviously, again, hospitality and manufacturing are the most impacted industries. They don't have the tourists here to help them out, or the backpackers and different people. So even though this is hard, businesses, like I've just sort of noted for ourselves, are still looking really hard to hire. For the next sort of 12 months. We're no different. Right? We're looking really hard to hire businesses in the next 12 months, and we'll continue to do it. And I think it's just, again, it's a factor of businesses that are growing need the right people on board to help them achieve their financial goals. So what are small to medium businesses doing to overcome some of these recruitment challenges? None of us are large corporates, so we don't have the ability to offer huge salaries or some kind of extra benefits that might come with it. So we've got to look at sort of ways that we can incentivize people to come and join the businesses. A flexible working policy is always high. And this is, again, I was reading press yesterday saying that's probably the biggest challenge with CEOs at the moment is the return to office versus work from home. And again, we are no different. Like we're a small but growing business. I'd love to have people back in the office full time, but it's just not a possibility at the moment. So it's, you've just got to be as flexible as you can on hiring the right people and offering the right flexibility in their work environment. The salary is still huge. And again, I wouldn't be Robinson Crusoe to say that people are getting, a lot of their employees come to them with higher salary demands, and we're the same. We, during COVID, we actually set up an offshore tech team. So we have sort of 10 to 12 people now based offshore to help drive our technology, because we couldn't quite keep up with of where we were going with the need to hire. And it's actually worked out really, really beneficial to us. All right, so supply chain restrictions, again, this is a massive one, and what's happened in Ukraine has only made this a lot worse. COVID started it, and now we've basically got a war on our hands. So nearly half businesses have been impacted by supply chain issues in the last year, and I think that's going to come as no surprise to anyone. The ones that are really hurt were manufacturing and retail, because even domestic supply chain was just so disrupted, let alone international. And look, as I was just saying there, so deliveries local, within state or interstate was with the bigger ones, which actually surprised me when we did this survey. I actually thought it would be more international side of things, but as you can see, that's quite a bit down the track. So it was just more logistics about, and COVID again drove a little bit of this, and even now that we've got COVID gone through, there's things like recruitment, the right people, having people who can drive the trucks or get deliveries to order. Because I don't know about you guys, but we've ordered things for work and they've taken up to a month to get there when you'd normally get them within the week. So what are people doing to overcome some of these supply chain issues? A big one is, and we found this, to give you an example of this, of buying stock earlier, we usually do a campaign to the retail sector from about September, October, November, in preparation for Christmas. That now has to take place basically from this month and for the next couple of months, because people are needing to be so far ahead in their purchases for Christmas or whatever the occasion might be, or just having stock, so that that last minute stock purchase is being really smashed and debilitated. And again, we've got some retail clients that really highlighted this to us in the way they've had to change their purchasing of stock. The fact that they go and diversify the suppliers used and looking at different options, they buy more regularly, they pay higher for stock, and one of which was really came up pretty regularly was that they actually moved away from international suppliers and looked for people who could do it domestically for them. So the key summary highlights is a lot of businesses, over half of businesses, are either achieving or exceeding their revenue targets. So there's still a really positive vibe out there in the market, even with some of these challenges that we've talked about. There's still people who are really positive about where they're going to go through for the rest of 2022 and into 2023. Nearly 2/3 of businesses, and this is particularly true of growing businesses, look to leverage funding to help them drive their growth. Again, nearly 2/3 of businesses face the challenges when trying to obtain their growth. So it's, there's probably a little bit of education there around what they do. Again, 60% of businesses looking to hire staff. So a lot of people are growing and they're probably having the same challenges that we all are. And 1/3 of businesses are looking at purchasing stock a lot earlier than they actually needed to or probably want to overcome some supply chain issues.
A couple of questions have come through different channels. So one of them was with talking about businesses taking on a more flexible working policy.
Yep.
They're ordering ahead, they're diversifying their suppliers. Do you think that's actually setting them up even better for the future?
I think COVID and some of the challenges we're experiencing at the moment have made businesses a lot more resilient, particularly those that are looking to continue growing. But businesses have decided they need to, if they stand still and they just do what they were doing, they're not going to survive. And even the fact of looking at different merger and acquisition opportunities, SME business owners, Australia's the same as everywhere. They are really innovative, right? And they're really driven and passionate about what they do. So they twist and turn, and we're no different to make sure that they're getting the best out of themselves. Look, I love our clients are great, and we learn so much from our clients. So yeah, it's every business owner has got probably that entrepreneurial spirit in them, and they just look at ways which are going to help them there. So it does make them a lot more resilient. Yes. Was
there anything in the survey, or perhaps it's more from your own, talking to your customers who are also SMEs around? You said that they're, to try and get those, the employees that they're looking at offering more flexible work practices. Some are able to actually offer higher salaries or getting more flexible with their salaries. Yep. Was there anything around how, did they think that there was a migration from small business to corporate, that corporates or anything like that? Or have you heard any?
Yeah, definitely. I've actually, that's come up a bit, and I'm going to be honest and say, look, we've been affected by that as well, right? So we've had people come in, particularly in technology. We found, and we're a tech house, but where you would have people who might come and sign on for you, and then a couple of months later get offered 25% plus more to go to a corporate, and you just can't compete with that as a business owner. So there has been a little bit of flight and towards the larger corporates, and I think that's, and I'll be honest, I really think it's around the salaries that have been offered. So it's short-termism, and I'm not being rude to the people who've done it, because they've obviously got a real need to do it, and it makes perfect sense for them at the time of their life. But eventually people want to work, and because we work so much of our lives, but they want to work in an environment that's right for them. And there's a reason that people didn't go and join a corporate to start with. So I'm really going to be really fascinated on what's going to happen in about 3 years' time or 2 years' time, when things start to get back to a little bit of normality in the employment supply and demand, and just what will happen there. But definitely there is a bit of a flight at the moment to corporates, and I this is my personal belief. I think it's more to do with the salaries that are being offered because they are trying to attract talent that they need.
I thought it was interesting too that a lot of SMEs are starting to look more at offshoring some of their functions, some of their employees. But the two was it retail and manufacturing who are hardest hit by they don't have that option necessarily. What do you think is going to happen in those industries, or is there any?
Yeah, it's a tough one. I mean, you just have to go into the CBD in Melbourne and see a lot of businesses that are now closed. Yeah, it's really, really tough. I think hospitality will come back, and I think once we're over winter and summer starts coming back in for hospitality, we'll get a few more of the travellers back in, and in the winter flu and COVID type months. So we'll get those travellers back in, which will help them and hopefully help retail a little bit too. But I think of the any two industries, those are the two that are going to be hurting for the longest, which is a real shame because they've gone through so much hard time to get there. And this is where we've had that real flexibility and pivot and change of direction, whatever it might be, to online sales and online revenue, particularly in the retail side of things, where you can see businesses that are closing stores and really focusing on their online channels. So it's and as a consequence, their revenue's up and probably their profits are too because their bricks and mortar and employee costs have gone down.
You also said in there that 62% of SMEs face challenges when getting funding. What is that partly the industry where the financing institutions are starting to kind of go, okay, we're a little bit hesitant now of these industries where we, 4 years ago we were throwing money at them, such as retail, hospitality and manufacturing, we're now getting wary? Or is it that they're they haven't set themselves up to be able to show a history of cash flows? What would you say to those SMEs about lining their ducks up so that they have a better chance of getting funding?
Yeah, absolutely. I think this has been a problem that's been around for a really long time, and it gets exaggerated by difficult market conditions like we're seeing at the moment. But I mean, that to be 100% honest, that's the reason why companies like Banjo started. But the banks had stopped servicing SMEs, and the reason they've stopped servicing SMEs, and it's only become stronger, and I'll probably break into that a bit. The reason they stopped servicing SMEs is that banks are really risk averse. They are very risk averse organisations, so they will want everything in their favour before they will lend money. So they're a lot more comfortable lending to a large corporate that has a massive balance sheet, where they know what they can do and they can still take security over some part of that balance sheet. With SMEs, a couple of things sort of come into play. But one is, that they don't have those systems and technology and to be able to produce what a bank would need to get to be comfortable, that they might not have the security that a bank is happy with to get them over their funding over the line. And the other thing that they just can't see in the business itself, just sort of where they're going to remove their risk for lending to them. So if I was going to give any advice to SMEs obtaining funding, it doesn't matter if it's from us or from a bank, is make sure you've got all your financial documentation up to date and really ready to go. So work with your accountant. Accountants are fantastic for this. So they help them get up to date. And so when we might ask for a profit and loss, or for certain areas we might ask for forecasts and things like that. So just have that information ready to go, and it just takes away a lot of the pain of having to, spend time putting together the financial information you need when the requests come in, because they will come in. A bank or us will ask for certain financial information, so it will come. So just be prepared and have everything up to date and ready to go.
So retail and hospitality is struggling at the moment, and also manufacturing because they can't get the staff. And when you're looking at supply chain, I was interested. It was fascinating to think that it was mainly intra and interstate, and then logistics issues internally that were the issues. Do you see opportunities for certain industries where you're kind of going, there's probably an opportunity to do things a lot better in this industry? And if you had that expertise and were thinking of starting up, this could be an area. So things like, in logistics and supply chain, if you, even a one-man delivery van sort of thing, is that something that there would be an opportunity for, or is it still
100%.
about?
Yeah, 100%. I think I actually think there's more of an opportunity for people to do domestic manufacturing away from international, because when the borders got closed, when the borders got closed, where it was 20 and 21, they were. It was really hard to get the supplies and the parts or whatever it might be that they needed. So manufacturing's been a big one. Excuse me. Logistics. There's definitely opportunities there, because we all have been frustrated with delays and deliveries and stuff over the last year. The only problem is you don't want to be over promising and under delivering. So and the reason that would come back to bite you is you can't get the staff. If you get run off your feet, you can't get the staff.
And that seems to be, and I've seen in heard anecdotally as well, staff used to be cash flow was the biggest issue. Staff is now completely trumped cash flow.
It's tough, right? It's really, really tough market. And we, as I've said in the presentation, we are no different. It's a bloody tough market out there.